Hello, welcome to Business Incorporated live on Channels Television. It's the first full trading week of October. It's moving along really fast right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. To raise or not to raise, local telecom operators cry out to NCC. And businesses globally celebrate customers to mark Customer Service Week. And it's inflation reporting season, and Egypt's CPI rises for the second consecutive month in September. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the commodities markets now, starting with metals. We see gold extended losses for a sixth straight session today to hover near a two-week low that it hit before, and lowered expectations of deeper rate cuts and traders turning their focus to the Federal Reserve's meeting and inflation. So we see spot gold unchanged. U.S. gold futures, $2,638, up about 0.1%. Spot silver, down about 0.3% at $30.62. Platinum holding up 0.4%. Palladium holding on to that $1,000 psychological level just by about $18 there, but down 0.3%. Let's get a check on oil now. See, oil prices steadied in Asian trade today as traders are weighing uncertainty surrounding developments in the Middle East conflict against the bearish fundamentals. Brent crude futures that rose by 0.3% to $77.40 a barrel, while the U.S. grade, that's trading at $73.71 a barrel. That's up by 0.2%. So we're seeing that spread getting wider. That's between WTI and Brent crude. But we're seeing prices tending up again. Maybe the bulls can take back what they've been pushing since about sub $60 for WTI. But the Hezbollah-Israel ceasefire might put markets wary. They're still waiting for some kind of potential retaliation right there. So all eyes on the Middle East tension at this time. So amidst the controversy, which involves Starlink and the alleged unapproved increase in tariffs for local operators in telecommunication industry, they're asking for approval to increase tariffs. That's local operators. The group managing director of VDT Communications, Mr. Abiodun Moni, was a guest on Business Morning, says that if this is not affected, then quality of service may be affected over time. Take a listen.
The industry, the prices is due for review. It's been due for a long while. And you can see, many companies are actually running at losses. MTN, you saw their half-year publication, and the same thing is happening all over. We've been hearing of smaller players dying, not as big as that. But the moment a company like Starlink comes in to the industry, things will change. There's been a lot of dislocation in terms of foreign exchange. Starlink probably counts his money in FX. You know what has happened in the last 1 year to the FX market? So this is actually affecting all operators. If we are talking of cost-reflective tariff, then definitely the reasons why you are seeing losses in operators' operations is because their costs are risen, whereas the revenue had actually not grown. And there is an urgent need for the regulator to start giving approval immediately.
And now to the banking sector. You're facing realities in Nigeria's financial sector as the bank's recapitalization process continues. That was the reason for a forum by the Nigerian American Chamber of Commerce. The event, which was held in Lagos, had the immediate past president of a Chartered Institute of Bankers of Nigeria, Mr. Ken Opara, sharing possible ways to accelerate financial inclusion in the country.
How the changing banking sector landscape can support Nigeria's socio-economic reforms is the focus of this meeting organized by the Nigerian American Chamber of Commerce. For the immediate past president of the Chartered Institute of Bankers, Mr. Ken Opara, the theme is a needed target that can be achieved through financial inclusion.
The formal in the banking sector also grew from 54% to 64%. Out of that 74%, the formal banking sector inclusion grew to 64%. Are we there yet? No. I can tell you that much. In Ghana, our next door neighbor, financial inclusion is 96%. The banks will remain internationally competitive. Foreign direct investors will then be able to invest. We're already seeing that even the current recapitalization, no longer just FPIs, foreign portfolio investor. We are seeing foreign direct investors coming in to invest in equity of some of these financial institutions.
The banking sector is just one of the many areas that require attention, which is why the audience here include representatives from the Manufacturers Association of Nigeria, players in different sectors, and even analysts interested in data to understand the trend of economic movement. All of this, the Chamber says, should be intentionally handled.
I mean, the banking sector is very critical, especially when you talk about US-Nigeria trade. Over the last year, we've had, profits of more than $1 trillion. So the banking sector is very key with respect to investments. Speaking about Nigeria and US, if central banks reforms are being adhered to and they have positive impacts on our economy, definitely the skyrocketing effect or the ripple effect would be improved trade volumes between Nigeria and the US. So we look at the digital transformations, we look at the digital variances that are coming up, we look at the rules and regulations that are put together by the CBN. Forex is also something that has been very critical to banking. So with all of this in mind, it's critical that the Nigerian American Chamber of Commerce puts together a forum that speaks to how the banking landscape is transforming the economy of Nigeria and our socio-economic lives.
Conversations such as this become useful only when actions are taken. The Chamber promises to follow up.
And today, we shine a spotlight on the vital role that customer service plays in every successful business. We'll also be discussing best practices that can elevate customer interactions. Join us for this conversation. We have two ladies that talk to customers a lot. We have Chidima Asuni, she's the Chief Customer Experience Officer, Coronation Group. We also have Chiamaka Ugo Bidike, Chief Client Officer, Coronation Registrars Limited. Join me via Zoom. Great to have you both.
Thank you, Ladi. Thank you for having us.
Fantastic. It's great to have you. Happy Customer Service Week. But let me start with Chidima now. These are challenging times for consumers and businesses alike. So how do you manage to put the consumer first, in a challenging business environment?
Right. So, thank you so much for having us once again. So these are very trying times for consumers, especially given the current economic situation. There's just so much pressure on the consumer, and the consumer is only going to buy what is a necessity. So in what we're doing, or what we need to do as customer service people in this case, is to make sure that, first off, is whatever we're offering the customer is fulfilling a need, a very basic fundamental need, or is adding additional value. That has to be done, because those are the only two things that will guarantee that the customer stays with you and that the customer sustains whatever business is being done with you. So two things is meeting them at the point of their need and adding value in whatever interactions we have.
Right, and I know the consumer service, the customer service, representatives, most of them, are going through a lot right now, dealing with a cost of living crisis. So how do you, put your issues aside, to make sure your customer gets the best experience? Chidima.
Right. The first thing is empathy. I think that is a very fundamental attribute from a customer service standpoint. The minute that we engage each interaction, or the minute we go into each interaction with empathy, I think we'll be on the road to ensuring that customers have meaningful interactions with us. So, for example, if a customer is complaining that they've not been able to perhaps withdraw money, or, you can see that this customer is in need. It's not about engaging in any defensive exchange with the customer. It's about acknowledging that we understand where they're at this point in time, understand the pain, and then go above and beyond to make sure that we can address their issues. So I think empathy is the critical word to answer your question.
All right, let me go to Chiamaka now. You know, the theme for this year's Customer Service Week is above and beyond. And, you know, definitely when you talk about going above and beyond, you know, for the customer, tell me, what does that entail really?
Thank you very much, Ladi, and happy Customer Service Week. It's that time of the year again. So going above and beyond is doing so much for the customer beyond their expectation. I know, and this is really very important, even as we celebrate this week, because beyond this week celebration, this should be our everyday reality for every organization that is open for business, that is getting money from people in terms of as customers and offering value. We must strive to go above and beyond what is expected beyond the customer expectation. Even meeting the customer, the basic expectation of the customer can be challenging. It takes a lot of effort. And so people must be willing to go beyond their limits, beyond what they can ordinarily just say, I have tried my best to really meet the customer needs. It can be around speed. You need to deliver fast. You need to deliver without error. You need to deliver, exactly as the customer wants it. So going beyond and above should be our everyday reality. Thank you.
Right, and going beyond and above, would that necessarily eat into revenue and profit of the company? That's for you, Chiamaka.
Can you take that again? I didn't quite get it.
Yeah, I said, going above and beyond, for the customer, does it translate to sometimes, eating into the revenue and profit of the company?
Does it translate into revenue?
That's eating into the revenue.
Is that the question?
Yes, eating into the revenue and profit of the company. In going above and beyond.
Going above and beyond. Yes. So the customer is the reason we are in business. And when we are able to go above and beyond to meet the customer expectation, it leads to the customer loyalty. And the customer continues to patronize the organization, and that increases the bottom line. Many businesses are out of business today because they are not able to meet up with their customer demand. And if you're not able to do that, your revenue will drop and continue to drop until you go out of business. So going above and beyond, like I said, must be done to keep everyone in business. Thank you.
All right, let me go to Chidima now. So what matters now, in this kind of business environment? Is it the customer's loyalty or the customer's money?
Very good question. So, of course, we're all in business to make money. So, I would not underestimate the value of, the bottom line. However, we're talking longer-term sustainability, especially now that customers have to compete, customers have limited funds and there's so many competing needs for customers. So you really need to be speaking you need to be speaking to the customer's emotions for them to pay you any attention. And so I would say loyalty is what will sustain whatever business you have with a customer in today's environment in the long run. You really have to be meeting an emotional need for these customers for them to stay with you beyond what we have now. Profitability, the bottom line, fantastic. However, stickiness for the customer is something that you can't underestimate at this point.
Would you say it's getting easier or harder to keep customers loyal, in these times?
Oh my, it's actually getting harder to keep customers because I think the service economy has basically created a very wide marketplace with so many options. So customers have a myriad of options to choose from. And if you're not serving them in one way, they hop onto the next. If you go on Instagram, TikTok, you have a myriad of vendors offering you their services on a platter. So, organizations have to work twice as hard to sustain customer attention, so to speak. And so in this environment that we're in, it's become a lot more difficult to, to keep the attention of the customer. You have to be doing something different for them to stay.
All right, well, let me come to Chiamaka now. So how do you make a customer loyal if your product or service is a want and not a need?
Yeah, there seems to be an audio issue. I can't hear you clearly. Please, can you take that again?
Yeah, so I'm saying, how do you, make a customer loyal, if your service or your product is a want and not a need?
Okay, very well. Thank you. So, yeah, in this environment that we are in, this current economic situation, people want to focus on their needs more than their wants. But again, you need customers to be loyal to you to keep your business going. So for you that you are into a business that is not a need, you're offering a service that is not a need, a want, you need to add other things to your business that keep the customer. Chidema talks about stickiness. You need to partner with other organizations that offer more like a bundling, so that even though they're not using your service, you can log on to other people's platform and still offer a service that they need. So orchestration is one way to do that. Partnership, strategic partnership is one way to do that. You may not be the one visible to the customer, but behind you are partnering to offer that service, and so you can continue to retain their loyalty. Thank you.
And how would you say, technology and social media is shaping, how businesses, keep customers loyal?
Yeah, I think there's still an audio issue. I still can't hear you very well.
Oh, I'm sorry about that.
Take that again.
Yeah, so how do you, use social media and technology to actually keep, your customers loyal to your brand?
Yeah, the social media is the new world right now. So any business that is not on the social media is missing out. So everybody must find an online presence. You must your website, your social media handle must show what you offer, because that is where most people go to when they are searching for a product or service. So you must ensure that your social media is up to date. If you look at so many people's handle, the last post may be like last year or 2 years ago, and then some of the information are stale. All the phone numbers on the page, nobody picks it. So for you, it's just like your new office. You must ensure that everything there is up to date, the phone number, the services, the pricing. The pricing most especially, people are on the go. They want to see the information as it is. So the social media is a new office, and everybody who wants to keep customers and want to attract new ones must be very visible on the media with up-to-date information. Thank you.
Yeah, it's quite interesting because you see on social media, sometimes on X, you see some customers going onto the platform there to call out, some brands, when they have issues with them. So we're seeing, most of these brands respond very fast when they see their mention on social media. But let me come to Chidima now. So definitely prices, I think everyone's getting used to higher prices now. You just expect that prices are going to go up, at some point, seeing what's happening with energy and food, in Nigeria. So Chidima, tell me, how are you seeing customer protection in Nigeria so far?
Sorry, I didn't quite hear what you said, the last part of your question.
Yeah, I'm asking how you're seeing consumer protection in Nigeria so far.
Right, correct. Okay, just wanted to confirm if you can still see the video just before I start.
I can see, we can see you, but you're not set up the way we set you up before. So that's why we're using that.
Yes, I was trying to log in from my laptop.
Right.
I think I had a little bit.
Right, but you can carry on. Yeah.
All right. So I would say consumer protection in Nigeria, we've made significant strides there. There are a lot of increased regulations around transparency, fairness, but the real challenge now comes with implementation. Okay, so these regulations exist, but how do we know that they are consistently applied across sectors? So for sectors that are heavily regulated, say financial services, it's easy to track the implementation of these things. But when you come to the gig economy, micro entrepreneurs, if you go on social media, everybody is monetizing their passions and living their passions and earning money off it. Now, are the consumers of these section of, or this group of entrepreneurs or business owners, are their consumers protected? I can't beat my chest and say yes. I think that we need to do a lot more in that area, because that's when you see a lot of customers take to the court of public opinion on social media to air their grievances, because that's about where the only place where they feel they can be heard. So I'll summarize to say that within the more structured sectors of the economy, yes, the consumer protection exists. However, there's a need for more education of the consumer on even what their rights are. That's number one. And then the more the sectors that are less well regulated, we need to shine the spotlight on those areas.
All right, I'm sure you remember the saying, the customer is always right. Is the customer still right?
The customer will always be right. There would be times when their perspective may be different, right? But I think all in all, they should always be heard. So we may not think that they're right in all contexts, but I think the bottom line is we need to understand that they're dealing with the general frustrations of daily life. And if you bring it home, the general frustrations of just being a Nigerian. So that's where the empathy that I spoke about earlier comes in. So it's not about arguing or proving who is right or wrong. I think it's about listening, making them feel valued, and even when they are not right, quote unquote, if we can handle that situation with understanding and with respect, we can turn negative experiences into positive ones. So no, the customer is not always right, but they should always feel like they matter.
Right.
I hope that answers the
Fantastic.
question.
Always make the customer feel right at this point. Thank you so much. Let me take it on to Chiamaka now. So how do you think businesses should actually, celebrate customers, this week? And what happens beyond this week?
Thank you very much, Nadi. So a lot of businesses are doing, implementing so many initiatives to celebrate their customers. We have gifts going out for working customers. We have refreshments. Just like in Coronation, we have gifts for our customers. We visit physically. We do a lot of things to ensure that they are served. Most importantly, that the reason why that they are doing business with us is met. That's primarily what it is. Then we can also give gifts and refreshments and all that. And then beyond the week, that has to continue. Most important is meeting their core needs. The reason they have come to us as customers must be met. And then meeting their needs emotionally and then seeing what more that they need. Just like Chidima talked about customer being right, the customer is right up to the extent of the service promise and to the extent you want to make more money from that customer. So we continue to listen to them. We continue to do exactly what they want so they keep coming back and they can refer others to the business and then the business continues to make money. Thank you. Right.
And maybe I should come to your office later and maybe I can get some refreshments, even though maybe I'm not that kind of customer, but we'll see. But thank you so much. It was great having you both. Chidima Asuni, Chief Customer Experience Officer, Coronation Group, and Chiamaka Ugo Obidike, Chief Client Officer at Coronation Registrars Limited. Thank you both for coming on.
Thank you very much for having us.
Thank you. Thank you for having us. Thank you.
All right, we'll take a break now. When we come back, we'll get a sense of how your money is performing at intraday in most of the markets we track. That's in a moment. Just stay with us. Welcome back. Well, let's find out what's happening with the local bourse and most of the global markets we track at this time. And Inijomekwa She has the details at this time, and definitely negative close for the local bourse yesterday.
Yes.
Wondering if we might see some kind of recovery.
Yeah, I guess we should have expected it because the analysts we spoke to intraday did warn us that the sentiments were looking negative, and we saw that at the close of trade where we lost more than we gained the day before. So I hope there'll be a bit of recovery today.
Right, and maybe a positive week, for close.
Positive week. Wow, maybe. I don't want to believe that far, but good afternoon, everyone. Let's just look at the market now. Let's do something a bit different. Look at the fixed income market this afternoon. So the numbers that we have are closing numbers from yesterday from federal government bonds, where there were just about 10 deals worth 11.3 billion naira, to the treasury bond, where there were 14 deals worth 8.83 billion naira, and then an OMO, that's what, of course, the central bank uses to mop up liquidity from the system. There were 13 deals, 143.51 billion naira. Let's talk about the implication of this and sentiments around this with James Adisa. James Adisa is a trader with Chapel Hill Denham. Hi, James. Good afternoon.
Hi, good afternoon. Thank you for having me on the show.
Great. So I don't know, do you have a lot of activity in the fixed income market these days?
Yeah, so there has been some activity. If you look at the primary markets, over the past 2 weeks, we've seen the central bank conduct about 3 OMO auctions. They've mopped up about 985 billion naira worth of OMO. You see, what we expect is that, with this aggressive stance from the CBN, we would see yields trend higher, and that has materialized. And we see that at the last auction, the 1-year paper was around 24%, and that means effective yields are around 31.75%. And so we've been seeing some activities, slight activities in the money market, but not so much in the bond market.
And there was the expectation that yields were going to be really low, especially for this quarter, after it does seem like the federal government has raised as much as they would have loved to, from the market, but it seems yields are still trending.
So, yeah, we expected that, the DMO's borrowing plans, when they release Q4 bond calendar, would be some form of succor for the market, given, where yields are currently. We also expect that coupon payments would also sort of douse the, trend that we're seeing, the yields trending higher. We expect that these are some of the factors that could potentially ease liquidity in the system, and that would translate to lower yields in the fixed income market. But right now, we're seeing that the central bank is really hawkish, doubling down on mopping up liquidity. We saw CRR debits to the tune of around 605 billion over last week, and system liquidity is currently in a net short position of around 700 billion. And we expect this trend to continue just because the central bank is really aggressive in, raising interest rates in order to possibly cultivate foreign portfolio investors.
All right. So what was the expectation? Do we see more aggressive interaction between the market and the government for this quarter?
So we think that, from the automobile side and for the money market side, given tight liquidity conditions, we might see lessen or lower activities in the fixed income market. We might not see so many trades moving through that market. But our expectations are still that, with the DMO's calendar set to, hopefully we'll see a reduced borrowing plan, and that would in turn translate to, less aggressiveness from the DMO and the CBN possibly, and that would mean that yields could moderate in the fourth quarter of the year. But, what we're seeing now is that yields are high, and if liquidity doesn't ease, we would still continue to see yields at current levels.
And unfortunately, this means more debt servicing for the government.
Yes.
Well, I don't know which way to turn now, but this obviously doesn't mean long-lasting investment into the economy, because most of them are FPIs. Before you know, they're out of it. But do we have more of local or international investors here?
The yields that are being offered in the fixed income market for savings bonds, we've seen attractive levels, and that has sort of attracted retail investors into the fixed income market. But the OMO bill, has a specific cadre of investors. So foreign investors and banks are allowed to participate in the OMO market. And we've seen that those are the yields that have really gone to the highest, about 40 basis points shy of where inflation is currently. For the NCB auction, we're expected to have one today. And our expectations are that yields will trend higher. We still think that foreign investors are very much active in this market and probably dominate the market, relative to foreign investors. But the yields that are being offered now are definitely pulling in foreign portfolio investments into the country.
We still saw that drop on the capital importation for second quarter.
Yes, exactly. And that's because we saw a slight moderation in yields also. That could partly explain why we've seen that decline in money market contribution to foreign portfolio investments by money market instruments.
Can we expect the same result for the end of Q3?
You mean in terms of foreign trade?
Importation, yeah. Importation, capital importation.
Yes. Well, in Q3, we had some of the banks carrying out their capital recapitalization exercise. And, that could in turn translate to improved inflows into the country. We've also seen yields trend higher. The central bank is definitely much more hawkish in reining in inflation, and that's compelling for money market instruments, in attracting foreign investors. So our sense is that we could potentially see an uptick in capital importation in the third quarter of the year. We can't rule that out. Nevertheless, we also are aware of the fact that, we will not continue to see interest rates at these elevated levels for the longest period of time. The central bank offering high interest rates is just a stopgap. The fiscal authorities are really, the onus is really on the fiscal authorities to pull in the foreign inflows that we need to sort of douse the pressure in the FX market. And one of the low-hanging fruits that we see is possibly selling some of the assets that are not being utilized efficiently. And that could in turn, pull in the capital that we need to ease the pressures that we're currently seeing in foreign exchange markets.
All right, James, thank you so much for those observations. We'll certainly be waiting for that Q3 data for capital importation. Hopefully, the banks would give us a reason to smile. But thank you so much for joining us.
Thank you for having me.
Great. All right, now let's look at other markets. That was Nigeria. Well, looking at Nigeria, but the stock market, now we see a bit of recovery. Intraday, 0.04%, but we're still 96,000 right there. But this is still slim to rejoice, so let's not be so happy or get comfortable with that. In South Africa, the Johannesburg Stock Exchange is in the red, 0.56% at intraday. And then for Egypt, it's positive, 0.5%, while for Nairobi Stock Exchange is almost the same, still retaining the 108 they had about this time yesterday. We look at other markets now. I believe we go to the Middle East and see a red or mixed market. Dubai is red, slightly so, 0.05%. Abu Dhabi is 0.37%, hanging on to the 9,000 level. Look at other parts now in the Middle East. Tadawul is also on the flip with Qatar, so 0.03% marginal gain intraday for Qatar, while for Tadawul, Saudi Arabia is 0.53% in the red. We go to the United States now, where futures were slightly down. There you have 0.1 for Dow Jones, S&P 0.12, NASDAQ also, so slightly down for most of them, and they seem to reflect growing optimism that the Federal Reserve can navigate a soft landing, especially after last week's huge job report on Friday. But now let's go back a couple of hours with Maria Bird, our Washington correspondent. She captured the summary of trading for yesterday.
The U.S. stock market had a strong day on Tuesday as the Dow Jones was up at 0.3%, the S&P 500 up at 1%, and the heavy tech Nasdaq took a major rebound at 1.5%. As tech stocks had a great day on Tuesday, it is clear that investors are watching to see what monetary policies will come out in the next days and weeks ahead, as they're still grappling with the fact that there will not be robust interest rate cuts in the near future. Investors are also watching to see how the oil prices will be, as it seems like they've taken a retreat over the last few days. This is much hope, as the Middle East tension seems to be cooling down just a bit. Investors are also watching to see what the next days and weeks ahead will mean for the U.S. economy.
Our correspondent there, Maria Bird, sent that from Washington. Now, let's see the final market. We're looking at the Asian market. Chinese stocks sold off in a volatile day of trading. Mixed Asia-Pacific markets on Wednesday. The Nikkei is back in the green. And yes, back on the 39,000 level. I wonder when it will hit that 40. That would be a big celebration for them, yes. Kospi is in the red, 0.61%, 2,594.36. Hang Seng Index, very deep in the red, 1.38% right there. Look at other markets in Asia, Shanghai and Nifty of India, both in the red. So we see one thing with Shanghai is when they want to be green, they are very green. And when it's going to be red, it's very red. So for 2 trading sessions, we've seen very green. I think we saw 8% up and then 4% up. Then today they've decided to go the flip way, and so we see it 6.62% in the red. That's a huge fall for that market at this time. So, Ladi, I don't know if we should do something about this Shanghai. Very interesting market.
Asia is looking really, really volatile, for the past couple of days, still on the back of that stimulus. They're coming
But I just wonder why Shanghai seems to be responding the most.
We have all those big companies there, like Samsung there. So once we also saw forward guidance for Samsung saying that they're not going to make as much, as expected for Q3 results. So all of that playing into investor sentiment.
All of that fit into this number.
All of that at this point. Thank you so much.
Thank you,
for giving us the details there. Most of these markets at our track. But let's get a check on what's happening with Europe now. So the trade dispute between European Union and China is escalating. Beijing announced it's imposing anti-dumping measures on brandy imported from the EU. So join us for more. We have Chiponda Chimbelu there. So Chip, can you bring us up to speed?
Thanks for having me. Well, Laddie, starting Friday, China-based importers of brandy that is made in the EU will have to pay tariffs between 30% and 39%. The Chinese government said it was making the move to protect China's domestic brandy industry. Now, the European Union says China's move violates free trade rules and it will lodge a complaint at the World Trade Organization. Beijing's brandy tariff announcement came just days after the EU approved a hike in tariffs on Chinese-made electric vehicles. And it means that the trade row between Brussels and Beijing now involves 2 major sectors, the auto industry and agriculture. And going forward, the EU will have to find a way to strike a balance between the varying interests of its member states when it comes to these sectors.
All right. What's happening with the markets in Europe now?
Well, Laddie, European stocks are expected to be little changed, but China-exposed shares could trade lower. Investors are still digesting Beijing's disappointing stimulus plan. And of course, later in the day, their focus will shift to the U.S., where the Federal Reserve is set to publish the minutes of its September interest rate meeting. Now, investors will be looking for signals on when the next interest rate cut could come. But that's not all. Markets will also be looking out for developments on the antitrust case against Google in the U.S. There are reports that the U.S. government is considering recommending that Google be forced to break up its online search business. And here in Germany, the country's economy is in focus. Economy Minister Robert Habeck is set to present a downward revision of the country's growth forecast. Media reports expect Berlin to say that the German economy will contract and go into recession this year.
The dreaded R word. Thank you so much, Chibona Jibele, for giving us the details from Europe. Let's get a check on what's happening and other stories now in North Africa. I did tell you it's inflation reporting season, and Egypt's annual urban consumer price inflation climbed for a second month in September, rising to 26.4% from 26.2%. And that's according to CapMass. So on a month-to-month, prices rose by 2.1%, reversing a 0.4% decline in July. Food prices rose by 2.6% compared with 1.8% in August. September food prices were 27.7% higher than they were earlier. That's a year earlier. So definitely expecting more countries to report on the inflation numbers. Let's see if the central bankers can keep cutting rates in this season. All right, to other markets now. We see it's red on the screen for the crypto market. Ethereum, $2,431. Bitcoin, 0.68% down. And BNB managed to stay in the green. And a couple of altcoins still in the red. Let's look at the sentiment now, how traders are feeling in this market. We know it's neutral. But getting closer to fear, that was yesterday. So sentiment is still neutral at this point. Then to some headlines now. HBO, their documentary on money, that's called Money Lecture, the Bitcoin Mystery. They identified a guy called Peter Todd as Bitcoin's pseudonymous creator. We know Satoshi Nakamoto is supposed to be the creator of Bitcoin, but now they're naming this 39-year-old Canadian who was known for his long-time contribution as a Bitcoin core developer. Now we see Justice Sun has received about 3.62 million of Eigen token, recently listed on Binance and major exchanges. So he's gotten this big amount and he sent all of that to Binance. What's he going to do with that? Is he going to sell it? We'll definitely find out. Then we see Brazil. They have a real pegged stablecoin at this point. They're exploring this whole stablecoin market. This one's going to be pegged to their currency this time. So all eyes on what's happening with stablecoins in the global market. But let's bring in my guest now. Let's bring in Adebayo. Adebayo is co-founder, ICP.Hub Sahara. Great to have you.
Great to be here once again, Ladi. Thank you for having me.
Right. So very interesting story with who they claim is the developer of Bitcoin, who made Bitcoin. We've always heard it's Satoshi Nakamoto. Nobody knows who he is. But is it possible that the creator of Bitcoin is among us?
Yeah, I mean, there has been a couple of conversations revolving around this. Remember, it's just one person, probably a group of people. But then this particular story has been put to bed for quite a while now, believing that the person no longer exists since the wallet has been inactive. But then a couple of wallets associated with the genesis of Bitcoin itself has been recently seen to be active. But should in case that this same person claimed to be Satoshi Nakamoto or a group of people are still there, well, there's going to be some serious bounce back on the market prices because then there will be lack of trust. People will be afraid because Satoshi himself is said to be owning, at least in their own portfolio, at least 1 billion Bitcoin in terms of the token itself. So then what happens if such a person is still there? What happens to the market? How would this 1 billion worth of Bitcoin be liquidated in the market? So there's going to be some sort of a serious bounce back on the market itself, if this is said to be, and if this is true anyway.
Right, but it can't be this Todd guy that they represented in documentary, right?
So sorry, come again.
Could it be the guy they mentioned? That's Todd. They said he's the creator. Could it be him in the HBO documentary?
Absolutely not. I mean, a lot of people have actually claimed that they are Satoshi Nakamoto, but then the only way to prove that they are who they say they are is to facilitate the transaction from the Genesis wallet itself. I mean, from the wallet claimed to be owned by Satoshi Nakamoto. A majority of them do not have access. So how can you claim you're somebody without having the identity to prove that indeed you are Satoshi Nakamoto? Craig Wright said he was, then eventually declined that he is because when the government were bouncing on him, so eventually said he wasn't Satoshi Nakamoto. So a lot of people would claim that they are, but none of them are actually.
Right, or maybe it could be you. Could you be Satoshi? Maybe. No?
I mean, we are all Satoshi. Let's put it that way. You are Satoshi, I am Satoshi.
Right, but we're seeing the role of stable coins now growing. A couple of countries exploring, pegging their currency with a stable coin. That will operate on the blockchain. So, looking at Africa now, do you think the stable coins have a role to play, in Africa's financial system?
Yeah, absolutely. Both positive and negative, by the way, because the government recently have been, if you notice, they've been clamping down on most of the exchanges that are sort of promoting the transaction of stable coins like USDT, USDC, and so on and so forth, saying that it's actually having a negative effect on Naira devaluation, enabling Naira to be further devaluated because of market speculators in the stablecoin industry. But then on the positive aspect, it's actually facilitated a lot of things like cross-border payments instantly, enabling people to be able to have a store of value. Because as Naira further devaluates, I mean, how easy is it to get dollar within the bank or probably from the Bureau de change? It's actually quite difficult. But stablecoin purchase is actually very, very straightforward and fast. It's something you can purchase under a couple of seconds to a few minutes. And it enables people to be able to have a true store of value as Naira to dollar continues to devaluate. And also, it makes it possible for people within Africa or even Nigeria to accept payments from foreign countries easily without all those huge amounts of charges being levied on by the banks and so on and so forth. So it sort of provides a lot of opportunities for people within Africa or even outside of Africa willing to transact with people in Africa, such that the banking system that we have today doesn't provide the sort of transparency or ease of transactions that is required in the modern business days. So stablecoin is, of course, good. We're looking at the economic situation of the country and how people are actually fleeing away with capitals and so on. So on the government side, this might not really be a good thing.
All right. Well, for me, it just feels like if the Naira strengthens, most of our issues might actually just, go away, at this point. But, definitely I'm up for anything that strengthens the Naira, at this point. Thank you so much for coming on. Adebayo Adebayo is a co-founder, ICP.Hub Sahara. Thank you.
Thank you very much once again, Ladi.
All right, that's the show, and that's how most markets we track are trading today. The week is almost over, at this point, but we'll bring you up to speed on what's happening tomorrow. You can watch this again on our YouTube channel. You can also join the conversation on X and just search for Channels Television, and you get all the information you need. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.